Hey everyone, it's Gerald back at it again with another video. In this video, I'm going to go over Lululemon stock as well as Sea Limited for their upcoming earnings in the next couple of weeks here. So first, let's go tackle Lululemon stock here. Lululemon as a brand is a premium athletic apparel leader with a powerful brand as well as international growth story, but now trading at a deep discount due to near-term margin pressure, United States slowdown, and a messy governance battle, so a proxy battle between Wilson, which is their founder here. So Lululemon is current PE of 9.6x is a fraction of its historical average in the apparel industry median of 20x, so over 2 times what it traditionally trades at, as well as the apparel industry here. So the company generates a 10.4% earnings yield and $922 million in free cash flow with a fortress balance sheet. They have zero debt, $1.8 billion in cash here. Wall Street seems to be thinking the same thing. They have 62 holds versus 23 buys with an average price target of 233, implying nearly a 77% upside from current valuations here. So I'm going to touch onto the bull case and bear case for this company here leading up into earnings here. Bull case is the stock is deeply undervalued on its fundamentals. This is a company that is trading at 9.6 trailing earnings and a 4.9x EV to EBITDA. So a 49% discount to its intrinsic value of 258, with Wall Street thinking it's implying about a 77% upside. Their international growth is actually one of the big key points for Lululemon stock, and it's becoming a bigger portion of their revenue stream as well. China revenue grew 28% in Q4 2025, and management actually guided for 20% growth in China and mid-teen growth in the rest of the world for fall of 2026 here. So this is a multi-year growth runway that the current valuations just ignoring completely here. Once again, the company is with zero debt, $1.8 billion in cash. So it allows for a lot of financial flexibility through buyback programs, right? So they are continuing a $1.2 billion buyback program, which is highly accretive at these current valuations here. They also with insider buys here. The interim co-CEO and board member both made significant market purchases in April, totaling nearly $1.5 million here. The bear case for this company, and there are quite a couple as well leading up into this earnings. Earnings are declining for this company, and the guidance was weak. Fall 2026 earnings per share guidance of 12.10 to 12.3 represent a 7 to 9% decline from fall's 13.26. Q1 2026 earnings per share is guided to just 1.63, down 35% from just 260 just a year ago. So this earnings trajectory is not going the right way, and that's ultimately what's causing the stock to have a landslide in terms of its price action here. Tariffs are also a major margin headwind for this company here. They face a $300 million in tariff exposure in fall of 2026 with $160 million in identified offsets here. The United States is obviously struggling here. It's not one of the key growth drivers that it once was here. So US comparable sales remain soft, and the inflection point keeps getting pushed out here. So this prolonged slowdown in the United States is going to be a detriment to the stock's price action unless they're able to stabilize it as well as continue growth in the international, specifically with China here. Of course, there's founder Chip Wilson waging a proxy battle for board seat, has been actually advising competitors like Alo and Vioro. So there's a clear conflict of interest. There's been a lot of drama in terms of that on Twitter or X, what's going on right now. It seems like he's trying to drive down the Lulu's price action, drive in a lot of activist investors like Elliott Management, as well as even potentially take over once again, or some news about a potential acquisition. So now the valuation for Lululemon is actually becoming very intriguing for a lot of private equity companies to potentially take over here. Looking at the company's daily time frame here, it's been on a landslide here. We are approaching major longer term trend line here at these levels here, leading up into its earnings here. Right now, we're sitting somewhat at a fib here. It seems to be holding this level, and the RSI is very oversold at around 31.79, and the MACD seems to be softening. So a potential inflection upwards seems possible if we're able to pick up any steam for Lululemon stock here. Looking at the dark pool, it's been heavily bearish with a net $84.3 million bullish net flow here. So 184 million compared to 20 million, which is that net of around 84.3 here. Getting some decently aggressive buys in the past couple of days here. So that is good to see if you're a Lululemon shareholder leading up into earnings here. The next stock I'm going to be taking a look at is Sea Limited. So this is a fundamentally strong Southeast Asian tech leader that's now trading at a 33% discount to its intrinsic value, driven by a powerful trifecta of e-commerce, fintech, and gaming growth. But right now, near-term margin pressure and inside selling is warranting a lot of caution, which I'm going to be talking about later in this video here. Looking at this company here, Sea Limited has transformed from a money-losing growth story into a profitable powerhouse with revenue surging 36% to nearly $23 billion in 2025 and net income swinging from a $1.65 billion loss in 2022 to now $1.58 billion in profit. Once again, going over the bull case for this company, this is a triple engine growth machine in terms of their e-commerce, their fintech, as well as gaming that are all firing in all cylinders here. So all growing at pretty impressive rates here. Dramatic profitability turnaround that we went across was the $1.65 billion in net loss and back in 2022 to now a positive $3.2 billion swing in just 3 years here. The stock is also massively undervalued from a discounted cash flow basis here. It has an intrinsic value of about $130.17 with a current price of around $87 here. So about a 33% margin of safety. And they are the undisputed e-commerce leader in Southeast Asia. There's no one bigger than them in terms of the e-commerce space here. So Shopee has a powerful network effects, a logistics network, and a growing VIP subscription program here. Bear case for this company are its margin compression, and the guidance has disappointed and what's caused the stock to trade lower as of most recently. Q4 2025 earnings missed earnings per share estimates by 21 to 40% here, and management guided for Shopee adjusted EBITDA to be at least flat here. They also have recent insider selling here. The COO sold 110,000 shares, which totaled $9.5 million between April and May. So a very, very recent insider selling. Once again, there's many different reasons for the company, for insiders to sell, but that's not what you want to see when valuations are at this low. So as you sort of see some profit taking or taking money off that table, that's not what you want to see as a shareholder leading up into earnings. So that's why I would definitely be cautious leading up into earnings if you are a shareholder, right? So reduce some exposure for this company here. I want to take a look at SE on the hidden whale data. Right now in the technicals, it's sitting at that golden retracement here. The dark pool data is reflecting that same bearish pressure here. So institutions are heavily bearish with about a net $90.4 million bearish net flow here. So I'm not seeing eager buyers sitting around these areas here. We've just retraced to the golden retracement. I'll be monitoring how the dark pool prints are going to be appearing in the next couple of days as it's sitting at a golden retracement here. So right now, of course, I would definitely be cautious for SC, definitely leading up into earnings. This is a company that's still trading at around a 30 PE. But of course, there is that margin of safety in terms of the average price target and what Wall Street seems to be thinking for it. But overall, valuations are still high. If that margin pressure still remains, that can put a lot of pressure into the stock and still lead to PE ratio being degraded before there's any re-rating to the upside here. So that is my analysis for both Lululemon and SE. If there's any other stock you guys want me to review, drop them down in the comments below, and I'll see you guys in the next video.